We should go ahead and get started now. Welcome to everybody. This is such a fun thing for me to be doing these videos because I get to see all my clients as kind of this this almost quilt chart in front of me. It's very cool. I hope everybody is doing well, is healthy, is getting through this craziness. The last call that we did was 2 weeks ago, 2 weeks ago today, and so much has changed since then. So I wanted to do another update. My agenda for the meeting today is to again kind of review a little bit about how this crisis has developed from an economic standpoint, not really from a public health standpoint. Update everybody again on what our strategy has been and what we've done recently and what we plan to do going forward. I want to give everybody a quick update on what's been going on legislative-wise with the CARES Act, how that impacts individuals, how that impacts those of you who own your own businesses, and what help is available. And then I want to finish off by introducing you all to an estate planning attorney named Naomi Stal, who's on the call today. She gave a wonderful presentation that I heard a week ago about how the coronavirus crisis is impacting people's estate plans, specifically things like powers of attorney for healthcare and advanced healthcare directives. So I'm going to give her some time to tell you about what you need to be doing with your own situations and those of your especially adult children or elderly parents. So I appreciate having Naomi on the call today. Okay, I'm going to share my screen now with you and start to go through the presentation. All right, great. So everybody should be seeing the first page of my PowerPoint here. So again, today is April 6th, 2020. This presentation does not include any information about the 8% jump in the market today. For whatever reason, the day-to-day movements of the markets have been absolutely crazy, but this does contain information and data kind of all the way up through Sunday, all the way up through yesterday. All right, so first, kind of a market overview, right? How did we get here? I had this slide in our last presentation 2 weeks ago, and now I've updated it with some information. What you see here is the blue line represents the S&P 500 year to date. Okay, so you see the percentage drop in the market as this crisis developed. I've always seen this crisis as in terms of an economic crisis, as in 4 levels. Level 1 being the initial disruption to the global supply chain, which is represented kind of by the halt in air and rail movement in the Wuhan province in China. Level 2 of this crisis began when Italy began to lock down some of its towns and villages, and that really affected global worker productivity. Really, the first time we saw economic impacts here in the US was when we first saw big public events like Coachella and Stagecoach become postponed. And then we saw right after that the NBA, the NHL, the MLB, Major League Baseball, all canceled their seasons, and that was right around March 9th. That began the level 3 crisis, which is where we're still at with this corona crisis, which is where we started seeing reduced consumer spending and reduced business investment. Now, I'm okay conceptually with this crisis being at a level 3. All of that would put us into a normal recessionary type economic situation, something that is recoverable. The news has been talking about a V-shaped recovery or a U-shaped recovery, though I don't think either of those are the most likely scenario. To even have a hope at a V-shaped recovery or a U-shaped recovery, we would have to get no further than a level 3 crisis. If we get to a level 4 crisis, which is when things start to break, that's where we start to risk a global or US debt crisis. And the events that I've spotlighted in the past as being the most likely representations of the start of a level 4 crisis would be something like, one of the major European countries defaulting on their debt, specifically Italy or Spain, who have been the most hard hit by this. Here in the US, we would look for three different possible events. One being banks not meeting their capital requirements. That was what put us into the financial crisis in 2008 and 2009, was banks' capitalization. The second possible event would be investment grade businesses rated A, AA, or AAA. If they start defaulting on their loans or filing bankruptcy, that would be another big trigger. Okay. The other one, which I kind of picked this number out of the air, something greater than a 20% unemployment rate, could also trigger, I think, a level 4 crisis. And again, the key parts of a level 4 crisis is that's when things start to break. As of right now, most areas of the economy aren't broken, we don't think. Anything like this could trigger a break that would make a V or U-shaped recovery, I think, extremely unlikely. And would, then we're looking at more like a 2008 Great Recession, or even people are talking about a Great Depression type scenario. The last piece of this chart that I want to bring your attention to is the orange line, which is the number of confirmed coronavirus cases. Now, because of the scale of this chart, the line doesn't look much different, but I do want to draw your attention to the fact that 2 weeks ago when we did this call, globally, the number of coronavirus cases was about 378,000. Today, it's over 1.2 million. In the last 2 weeks, the number of cases of the coronavirus have grown 3 times. Now, in that same period of time, not including the increase in the market today, the US stock market has actually increased from a bottom point, because we essentially had our last call 2 weeks ago on Monday was pretty much the bottom of the market thus far. The market is actually up 9% since we had our last call. So even though cases have grown by 3 times, the market's actually up. And I think some of it has to do with hope about the effectiveness of both the stimulus package and the Fed's intervention. Yeah, okay. All right, so let's talk about that level 4 crisis, because from my point of view, this is really the only thing that matters when it comes to investment planning right now. Now, again, the 3 areas that we're looking at here in the US are, we're looking at workers and the rate of unemployment, we're looking at businesses and whether they're likely to default, and we're looking at banks and whether they are maintaining good capitalization. All 3 of those pieces have to be working to keep us out of a level 4 crisis. And there's several different areas of the government that are working to try and keep those things working. We've got the Fed. They've probably been the most active and most interventionist and most proactive of any of these different sources in trying to keep this working. The Fed started very early on cutting interest rates, pumping liquidity into the system, making sure that the bank piece, which is their main responsibility, making sure that the banks remain very well capitalized. And I think because of both their activities this year, but really their activities going all the way back to 2009 and 2010, I think because of that, banks globally are very well capitalized and seem like they, at this point, are poised to weather this. Then we've got Congress. Of course, they passed several different acts, including the CARES Act, which we'll talk about in a second, that has had an impact. But from my point of view, I think the CARES Act only bought us about 30 to 45 days. I'm still looking at June 1st as sort of the make or break moment for whether, all 3 of these, important, institutions, workers, businesses, and banks, if we can make it past June 1st, that's kind of our next benchmark. The president, of course, is doing a lot of things, to help and sometimes hurt all 3 of these. The states are also doing things to help and hurt all 3 institutions. And then the private sector is doing a little bit, but the private sector is mostly just looking out for themselves right now, as we've seen from many of the banks. Okay, so quick update then. How are workers doing? Well, we've had 10 million workers file for unemployment in a 2-week period. That is just unprecedented in how high it was. The first week of this crisis, we had 3.3 million people file for unemployment. The following week, we had over 6 million people file for unemployment. The previous weekly record during the Great Recession was only 600,000. So to have 3 million and then 6 million, it's just off the charts large as far as the number of people filing unemployment. But at least as of March, the unemployment rate was only at about 4.4%. So that's still a long ways away from 20%. Now, this is backwards looking, okay? This doesn't, the problem with this unemployment data we get is that it's a lagging indicator. It's always a couple weeks behind of what reality is. And we know people who would want to file for unemployment haven't been able to. And so those numbers are just going to keep growing, and we anticipate them to grow pretty rapidly. But again, I'm looking for that kind of breaking point where maybe it hits a 20% mark. High risk industries, when I look at businesses, potentially defaulting, I'm looking at, investment grade businesses in all of these high risk industries. So far, we've had no high grade, highly rated businesses file bankruptcy, but the ones most at risk right now are travel, leisure, and airlines, which of course are getting slammed. On the bank side, as I said before, things are looking pretty good, looking pretty strong. They're much stronger than they were in 2008, and the Fed, as I said, has been extremely interventionist trying to fix that. So in light of all of that, our strategic investment plan really, it didn't start with this crisis. Our strategic investment plan started 2 years ago when we started preparing for whatever the next recession was going to be. We obviously didn't know it was going to be a global pandemic, but we knew it was going to be something. And so we started off by building a war chest for clients inside of their portfolio. Now, during this crisis, we're going to be implementing 3 strategies. We're going to be rebalancing the portfolios regularly, using that war chest that we built up over the last 2 years and buying into the market low as opportunity presents itself. We're going to be doing tax loss harvesting in non-retirement accounts. A tax loss is when an investment loses value, you can sell it, creating a realized tax loss. You can buy a different investment of roughly the same type and use that loss to save on taxes on your tax return. There's a whole lot more details that go into that I won't get into, but that's one of the strategies we'll be implementing through this crisis. And then the fourth one is using defensive investments to provide clients with cash flow. As I said in the last presentation, we've got anywhere between 5 and 6 years of clients' needed cash flow in either money market cash, treasuries, or defensive bond positions. All right, here's a little look at the market and a timeline of kind of how we've implemented this investment strategy. If we go back 2 years ago, that's when we started building up clients' war chests in February of 2018. Okay, so there's a look at where the Dow was when we first started building that war chest. At that time, we raised about a 10% war chest. Then about a year later, we added to that war chest, bringing it up to about 15% of our clients' portfolios in defensive type positions. Okay, but the market continued going up after we did that. Okay, then of course we had the big drop that we've experienced, over the last month, at essentially the very bottom of the market, which, in retrospect, it was lucky timing, but we did our very first rebalance on March 25th, 6th, and 7th, or 4th, 5th, and March 23rd, 24th, and 25th, and 26th. That week, we did rebalancing, and and reinvested about 4% of that 15% war chest back into the market. And we pretty much got the bottom by luck. Right after that, we started tax loss harvesting, the second piece of our strategy. So for all of our clients who have non-retirement accounts who had tax losses, we went ahead and harvested those. So those will benefit you on your tax return. Okay, again, kind of a look at our calendar for our strategy going forward. This was a graphic I used in our last presentation, kind of showing you the history of how we implemented our investment strategy. 2 years ago, we started building the war chest. A year ago, we added to that war chest. Today, we're rebalancing back into US equities and international equities low, using 4% of that war chest. And then our plan is every month going forward, this is a flexible plan, but our plan is once a month going forward, reinvest 1% of that war chest back into the market where we took it out of 2 years ago. And so that'll go from about April from this month until about February 2021. We can change that plan as needed, either accelerating it or decelerating it as opportunity presents itself. Okay, I want to move on from the market and from investment strategy to talk a little bit about the CARES Act. There's still so much to learn, but I did want to highlight some of the key points that are likely to affect you and your families from these new rules. The first one is anybody who thought they were going to have to do a required minimum distribution this year, you do not have to do a required minimum distribution this year if you do not want to. The required minimum distributions for 2020, that requirement has been waived. Okay. Also, what was implemented last year, which you may or may not know about, is the new age for required minimum distributions is not 70 and a half anymore. That has been pushed back. The new age to start your RMDs is age 72. Okay. So even if you were age 70 this year, 71 this year, 72 this year, and any age beyond that, you are not going to have to do a required minimum distribution this year. If you had already done it in January, we can reverse it. Okay, so reach out to me if that's the case. I know I've already reached out to a couple of you regarding that. Okay, also, if you have friends or family that are in need of their retirement money to help bridge them through this crisis, but they are not yet age 59 and a half when you can normally withdraw from an IRA without penalty, those early withdrawal penalties are being waived right now. So if you're experiencing a hardship and you need to take money out of an IRA or a 401k and you would normally have a 10% penalty, that early withdrawal penalty is being waived. And the new loan limit for 401ks has been increased from 50,000 to 100,000. Now, the stimulus checks are supposedly in the mail. I don't know whether anybody has actually gotten it yet, but individuals would get a check for $1,200 as long as you made under $75,000 of income. I know a lot of my clients, you guys are well above that. Couples would get double that, $2,400. Again, if their income is under $150,000, it starts to phase out very quickly above those income limits. Plus, you get $500 per dependent child. So that's a little bit of help. If you're having trouble making ends meet and the cash flow is very tight, you can defer almost all types of debt right now for at least 60 to 90 days. Mortgages, auto loans, credit cards, student loans, almost all of them can be deferred right now, and the banks are making it relatively easy to do that. The tax filing deadline is not April 15th this year. It's been pushed back to July 15th. Also, penalties, I understand penalties and fees will be waived if you don't make payments until July 15th, but talk to your tax advisor a little bit more for that. Unemployment, including 1099 employees, are now eligible to file for unemployment, and the federal government is tacking on a $600 per week unemployment benefit on top of whatever your state benefits are that you'd be eligible for. And then finally, for small businesses under 500 employees, there are two programs going right now: the Economic Disaster Relief Loan, available directly through the SBA, and then the Paycheck Protection Program, which has been a source of personal frustration for me because it has been so badly rolled out. But this is the program that is supposedly offering these forgiven loans to help people maintain the same level of employment with their employees, for business owners to maintain the same level of employment for their employees through this crisis. But it has been very difficult to get your hands on the payment protection program. And a lot of banks are just, they've just stopped offering it because their capacity to write these loans has just been exceeded. So that's a little bit of the help that's out there. Before I transition this over to Naomi, I do want to talk a little bit about the market level as it is today. You know, the market's up about 8% right now, at least as of 5 minutes ago or 20 minutes ago when I checked it. And we're essentially at, you know, about the level of the stock market that we were about two and a half years ago, I think, at this point. And I think back to what the economy was like 2.5 years ago, and I kind of scratch my head and go, well, wait a second, are we really, as an economy, are we really at the same place we were 2.5 years ago? How are we not worse off today than we were 2.5 years ago? How is corporate profitability and expectations of corporate profitability not worse today than it was 2.5 years ago? And this question's kind of been plaguing me the last couple weeks. And so when I was looking into it, you know, what I found is that the S&P 500 and the Dow Jones Industrial Average, they're both a little bit misleading when you look at the level of those indices as an indicator for the entire economy. Both of those indices are what's called a weighted indice, which means the larger the market capitalization of a company, the bigger part they play in how much that index is. So let me use the S&P 500 as an example. The 5 largest companies make up about 20% of the S&P 500. Okay, so 5 out of 500. Okay, so the top 5 make up over 20% of the value of the index. The other 495 companies make up the other 80% of the index. Now, the top 5 companies in the S&P 500 are Amazon, Google, Facebook. Oh shoot, I'm drawing a blank. Amazon, Google, Facebook, Microsoft, and Apple. Okay, 5 technology companies that have not been terribly hurt by this crisis, right? All of which their stocks have dropped in value, but not nearly as much as the market overall. Okay, so when you look at the level of the Dow and you look at the level of the S&P 500, you have to understand the largest, biggest companies in the United States right now are technology companies, and they are weathering this crisis much better than the other sectors of the economy. Which is why I don't believe that the US stock market today is really painting an accurate picture of the state of the economy overall. Okay, I want to transition now over to Naomi. I'm going to stop sharing my video for a second here. Okay, so now I want to hand it over to Naomi so she can have a chance to tell you all about what she knows on how this really coronavirus should affect what you're doing with your estate documents. Naomi?
Okay, so first I wanted to say thank you, John, for welcoming me here. It's nice to meet all of you virtually. And then also, will you be my timekeeper so that I don't go over whatever time I have to speak to everybody? Okay.
Yeah.
So, hi everybody, my name is Naomi Stal. I'm an estate planning attorney with Family Security Law Group. We're located in Thousand Oaks, and we're kind of a boutique kind of firm in the sense that we do estate planning, trust administration, probate, will administration, conservatorships, and anything kind of in between with regards to transitioning trusts and trustees and things like that. But we'll get to that if we have some time. So, and John, I would like to say thank you very much for inviting me. I feel really grateful to be here. So let's talk about we're going to talk about two things. The first thing we're going to talk about is what we can do now to take care of ourselves and protect ourselves, given that there is a pandemic that is affecting people's health. And then the second piece I'm going to talk about is what we need to know if we should die. And God forbid we should all live to 120, but just on the off chance, even if it's not us, if it's somebody that we remotely know, if somebody should die during the pandemic, what we need to know about their estate, their assets, etc. Okay, so the first thing we're talking about are 3 essential documents that have nothing to do with the death. And some attorneys morbidly refer to them as above the ground estate planning documents because they help give you guidance during your lifetime. So let's just say there's no pandemic. I go skiing, I hit a tree, and I'm in a coma for 2 months. I'm going to recover. I'm going to be fine. But in those 2 months, there's going to be some issues with relations to my assets and my health, and who can find out information about my progress from medical professionals. So those are the 3 essential documents that we need to talk about right now to protect ourselves during this pandemic. The first one is called a durable power of attorney over assets. Some people call it a financial durable power of attorney. Some people call it a durable power of attorney over finances. But the bottom line is that this document provides legal authority over your finances. And you essentially predetermine who you want to control your finances, manage your finances, and everything related to it. And then if the time comes that you become incapacitated, the only thing your family needs to deal with is the chaos of you being incapacitated and how that affects your family emotionally, spiritually, etc. They don't have to worry about scrambling to figure out how to get access to your paying your bills or running your business or dealing with your banks. And I will also say, with regards to this document, that in the last 2 years, there was a new act relating to digital assets. And now, for example, if God forbid something should happen to one of my loved ones, and I try to get into, let's say, my husband's Apple phone, and I don't have his ID, if you don't have digital asset authorization, I won't have the ability to reach out to Apple and say, hey, my husband's incapacitated, he pays all his bills on his phone, and I need you to override his account and give me his password. Now, the courts are actually closed, so we couldn't even take this to court. But if we did, what's happened in this regard is the courts will not touch this. They'll say each online account has their own user agreements. You clicked, I agree, so we're not getting involved. So if that technology company wants to provide you access and override, then they will. And if they don't, you have no power to get that information. So part of a durable power of attorney over assets is making sure that you're providing digital asset authorization to the categories of, virtual records, shall we call them, the things that I call gatekeepers, which is passwords and account numbers. You don't really own them, but they are the keys to getting into the kingdom. Same thing as regards to bank accounts and assets. So I won't belabor the point about digital assets. It's suffice to say that we do definitely need to handle them in our durable power of attorney over finance. We address them, and we also encourage clients to come up with a system to share the information with each other. Now, the next document is called the Advanced Healthcare Directive. Some people call it a medical healthcare directive. But the bottom line about this document is that this document appoints an agent on your behalf in case you are unable to make medical decisions for yourself. Now, why is this important, especially now during this pandemic? Well, let's see. For example, I had a baby, and I had a very tumultuous experience having my baby, and I had my husband in the hospital as my advocate. And so when every doctor came in and gave different orders and it seemed not so safe, my husband was there to advocate on my behalf. But due to the pandemic, not only are extended family members not allowed into the hospitals, but in some instances, spouses aren't allowed into the hospitals. So if you have no medical healthcare directive and you're sick, and there's not even anybody in the hospital to say, hey, my mom wants this or my wife wants this, then this becomes an even more dangerous situation for you. So normally we advocate have a healthcare directive, but in this situation, we're saying definitely have a healthcare directive. And I would also add on top of that, that what we're recommending to clients is execute a healthcare directive and then make sure that everybody in your family they each have their own healthcare directives on their cell phones in a way that they can at least tell a doctor or medical professional, it's in my cam scanner app, it's in my email account, email my daughter, her address is XYZ and she'll send it to you. Because there are some medical healthcare institutions, I think Kaiser is one of them, where you can put these documents online, but I also don't know how to do that, and not everybody has Kaiser. So it's really important that you have access to a healthcare directive and that you create one. And the final document is a HIPAA release. So basically, in the United States, there's privacy laws that prohibit medical professionals from sharing medical information about you with anybody else. So the purpose of a HIPAA release is this document sets forth the people that you have authorized medical providers to provide information to. Now, why is this also a really important document right now? For the same reason as the healthcare directive. People aren't coming into the hospitals with their loved ones. So let's go back to my pregnancy situation. They saw my husband was there. They saw us talking. They saw me arguing with him. They saw me kissing him. They knew that that was my husband. But what if he wasn't in the hospital and I'm not conscious and he calls and says, oh, I'm Naomi's husband. Well, we happen to have different last names. Are the doctors going to stop and try to verify this? No, they're not. Is he going to try to send them information? Will they even have time to look at it? No, they won't. So if he's not allowed in the hospital, and due to this pandemic, doctors could even care less, they're definitely going to be stricter, in my opinion, relating to providing information to people that are not authorized on a medical professional HIPAA authorization. So I will sum up by saying these three documents we believe are essential documents for you to have now. It's a power of attorney over assets, a power of attorney over healthcare decisions, and a HIPAA release. Now, oftentimes when you have, how am I doing for time, John? Can't hear you. You're on mute.
I said a couple more minutes.
Great. Okay. So normally estate planning attorneys, and I'm going to say that in general because I think most estate planning attorneys in Southern California do this, they will include these documents in what we call an overall estate plan. Now, an estate plan includes these documents, but it will also include a trust, a pour over will, it'll transfer deeds into trust if you don't already have a trust, community property agreements, transmutation agreements, all kinds of other essential documents, that some of which we call below the ground if we're being morbid. So these documents are generally come as a bundle, but I don't know about other law firms, but I know for us, we're offering these documents unbundled as their own little set because, and at I would say a pretty significant discount than what they cost with the estate plan, because they're really essential for people. And we want people to be protected and we want people to be safe. So we're recommending to people, get these documents and then make sure you get them scanned and put onto your phones. Now, if you have them already, that's fantastic. But what you need to do is go find them. So everybody who has an estate plan that already has these documents, make a note, figure out where you put your binder for your estate planning documents and go look in it and see what it says. You don't have, if it's a 10-page document, your lawyers did a great job, but you don't have to read the whole thing. You're looking for, first you're looking for who is the agent that you appointed. Is that person still alive? Are you in a fight with them? Do you not trust them anymore? Maybe you're divorced. Maybe they're, who knows? Maybe somebody else is more competent now. So you have to look at who you appointed as your agent, and is that somebody that you still want to be your agent? And I don't want to say less importantly, but less importantly is if you're curious about what decisions you made with regard to your healthcare, then peruse through the document and see what you actually said you wanted whenever you had done your documents. And I recommend the same thing for your HIPAA authorization. It'll say something like medical release or HIPAA release, something like that. And look and see, you're just looking for the list of people that you want information to be provided to. So in some instances, if you haven't done them in 10 years, well, you might have a child that was 10 years old, 10 years ago, and now they're 20, and you would want them to have information. So those kinds of documents, look at them, make sure they represent your wishes. If not, update them. If so, great. Then just take a picture of them, scan them, carry them with you. I will recommend 2 apps. One is called Cam Scanner. It's for Androids. It's free. And basically it allows you to hold your phone like this, take a picture of a document, and then with a click, you can turn it into a PDF. And with another click, you can email it. And then there's that same exact app on Apple, and I think that one is called TurboScan. So those are a good way to keep your documents scanned and available on your phone. And even if you get them on there and you don't know how to open them, chances are there's going to be some 30-something-year-old somewhere who's going to have gloves and know how to open that app. So don't worry about how to access it. Just worry about getting it on your phone. The final thing we will talk about on a more serious note is with regards to your estate, with regards to an actual total estate plan. If you do have one, let's talk about that situation first. If you have one, look at it. It's very important that if you have a trust already, and if you have a trust already, it's very important that you know what it says with regards to your wishes of who you want to be trustee in the event you're incapacitated or, God forbid, pass away. It's important to look at the sections regarding distributions, who your beneficiaries are, at what ages they're going to be takers of your trust estate, and double check and make sure that you haven't refinanced your house since you drafted your trust and the mortgage company, refi company, forgot to put the house back in the trust. That's a very common scenario, and it's not a complete disaster, but it is going to cost a lot of money and time to get things back into the trust. And the most important thing about that is the courts are closed. So one of the biggest benefits of having a trust over having only a will, besides the amount of money that you waste giving to lawyers, executors, and the government, is that a probate administration, when a person dies with a will or without, is a court process. The court supervises, and it's mandatory. The court supervises everything that you owe and everything that you own. They add it up, they figure it out, they see an inventory, and only then do they distribute. Now, a trust is completely private. So yes, there's still administration. You don't just wave a magic wand and, oh, I have a trust, so now distribution happens. There still is an administration process, but it's completely private, which means if, God forbid, somebody I love dies and they have a trust and all of the assets that are meant to be poured into the trust are actually in the trust, then that transition can be seamless with regards to distribution, administration, and advancing your wishes. If right now you don't have a trust and you have more than $150,000 of assets, then you need a trust because the courts are closed. And I have cases that are supposed to be appearing in 2 weeks and 1 month. And I'm getting memos from the judge in probate in Ventura County J6, which are alarming, saying 90-day suspensions for any hearings. And the things at the courthouse are scary. So if, God forbid, somebody dies and they don't have a trust and they own a house in Southern California, there's nothing that their executor can do to even begin the administration process. Their hands are completely tied. The executor in their will, named in their will not even have authority to do anything because you have to petition the court for authority. Now, even though that sounds, like it's not a litigious process, it's just a court supervised process. You have to file a petition, and then the court says, who are you? And you say, oh, I'm Naomi, and you know, it says in the will that I'm supposed to be taking care of my dad's estate. Okay, well, right now you can't even tell that to the court because they're closed. So the takeaways here are: look at your trust, review it, make sure that it has all your assets in it that are meant to be in there, and that your wishes are reflected according to what your life looks like right now. Review your advanced healthcare directives, review your durable power of attorney over assets, and review your HIPAA, and make sure that all the named individuals are still the people that you want to be named. And if you don't have those documents, then get them. That is my recommendation. And then I say put everything on your phone and have it in there. So if God forbid you or a loved one ends up in the hospital, everybody's going to know where their information is. So I don't know how I'm doing with time, but if there is time, I'm happy to answer questions. If not, you can give them my contact information. I'm available. You can email me or call me to chat. We generally do flat fees for these types of things. So I'm not going to charge you for a 20-minute phone call. You just call me and we'll figure it out. So, and I do appreciate John, you know, letting me take the time to share this with people, since I feel very powerfully that, you know, I really want people to be safe and protective, because being sick, it's chaos enough for everybody.
All right. Well, I will plan on putting together another one of these within another week or two. 2 weeks felt a little bit long to me. I'll try and maybe get another one of these going for Monday. Certainly a lot is happening. It's all happening very quickly, and I want to be sure that I'm getting the information out to you that you need as frequently as possible. Of course, if you have questions that come up, if you're wondering how the things we talked about today affect your situation specifically, please reach out to me. Myself and my team, we are at full, we're running at 100% right now. Of course, we're not in the office every day. We're trying to do social distancing like everybody else, but we are not missing a beat, and we're on it, working hard for you. So thank you everybody for being here today. It makes me so happy to see all of you and hear that you guys are healthy and doing well. So take care and take care of yourselves.